Good morning, traders. Today is the day. It is the FOMC interest rate decision, and there's a lot of things you need to know. So make sure you guys stay tuned for our charting session at the end, where I discuss various scenarios that can happen and how that would impact the financial market. So stay tuned for that. Now, first things first. This interest rate announcement, it is expected that Feds will increase rates by another 25 basis points. But if you are experienced in financial markets, you know that Feds tend to pivot once banks and financials have issues going forward. There has also been news, an economic event with the CPI report in Great Britain, and it has confirmed that inflation year over year is 10%, which was higher than the expectation of 9%. So the European zone is having difficulties in controlling inflation due to the high rise in commodities and the Russian-Ukraine war. So that has continued to remain a problem across the board here. But so far, pre-market, we don't see any major weakness in banks at this time, and it pretty much looks like the S&P 500. The market makers are not concerned. So the interest rate announcement is happening at 2 p.m. Eastern time zone. That's when the announcement will be made, whether there will be an increase in rates or decrease or left unchanged. And there will be a press conference that will happen 30 minutes after. So that will be 2:30 p.m. Eastern time zone. Now stay tuned for our charting session. I will go in detail over how these levels are affected and what you need to know as a day trader. Morning, everyone. So hope you guys are doing good and managed to make some nice profits yesterday, because I know a lot of people have been messaging me and telling me what a good day it was. Okay, so if you didn't, no worries. There's always another opportunity that exists, but we are along the way here. And this interest rate announcement that is happening today is one of the most important days in the financial markets. Okay, pretty much because now that we do know that SPX is in danger zone with with the financials collapsing and a lot of financial institutions at risk. Okay, so whenever there is a vulnerability in the financial institutions, this presents as a usual time where Feds tend to pivot or Feds tend to do something else. Okay, just to control the market. So with that in mind here, let's look at the premiums. Okay, so we see that SPX currently is trading around that 4K neutral zone. So we're seeing put premiums. So let me just okay, so I got to change that. Okay, so we're seeing call premiums, as far as 100 points up, go for pretty much $1 here, and that is really expensive, nevertheless, right? So, and we're seeing premiums that also 100 points down, exactly $2. So pretty much the puts are more expensive here, as you can see, but it doesn't really necessarily mean that we're going to go down or up or whatever the case might be. But interesting to kind of note that. So just keep that in your mind. Okay. So stocks that are doing pretty well pre-market at this time, we see Tesla moving higher. So the upgrade for Moody's, very positive thing here. Looks like it wants to get to 200 and possibly higher. We took profits on our calls, not a big problem there, but they do look like they could probably, go a little further into it. Okay. Snow slightly weak. We haven't been trading that. And banks and so forth are doing pretty good. So other than that, nothing really of interest. And Nvidia, even after considering the event, they did have breakthrough in chips, and we may get some more news because the event is going to continue on. I pretty much got bored of the conference, that's why I stopped watching. But let's see if they have any major announcement. But Nvidia has been, of course, partnering with a lot of other companies such as Google, Microsoft, and all of that, right? and that is definitely bullish for the stock as well. And they've designed some of their chips so that it can pretty much get through the sanctions and sell through China. Okay, so the one of their advanced chips that they got. Okay, so one thing that I want to note as well with you guys. So news came out earlier that the basically CPI report in the CPI report in UK, right, came in higher than expected. Okay, so their inflation year over year is at 10.4% and is not going down. Okay, so big problem in the UK there, and let's see how that impacts markets, right? We got Lagarde speak as well. Nothing really, no news from that side, but main thing is, guys, FOMC decision, right? As you can see here, happens at 2 o'clock Eastern time zone, so 2 hours left in the market, the last 2 hours. That's when we're going to have the announcement. There is a press conference that will happen 30 minutes after the fact. So two types of risks, as you guys know, during FOMC is when that happens, 30 minutes after we can see, questions and Q&A happen. And depending on the questionnaire, that will move markets. So you want to definitely keep that in mind. Now, this is what I think on SPX right now. So I pretty much mentioned this in the chat as well too. But so far we see SPX here. We see SPX over here into our bullish range. Okay, so we do know that the 50-day MA is at 40.12 here, and so far the 4,000 level is holding, and the market is waiting for the announcement before deciding to move lower. Okay, now we're seeing 40.65, 40.60 area here as the massive breakout level here. Okay, if you watch the SPX call premiums, the 40.60 right now is going for around $5 to $6. Okay, so that's going to be the midpoint that we're seeing. But biggest key inflection point is right there. My speculation here is that if interest rates, let's just say Powell decides not to raise rates, I think we can see SPX surge to 40.60 and 40.65. And I would pretty much take profits there because I think pretty much this 40.65 area is going to be very tough to break off that news. But if they cut rates, then I'm pretty positive that level will break. Okay, so if we do get break above that level, we may retest the highs again and back to 4,200 level. So that's my expectation. Now, if they don't increase rates, then what I think would happen is that we go back to that 39.50 area, retest the 200-day MA, which is 39.30 area. And in my model here, 39.30 area, if we get through that zone, then you're looking at a possible complete collapse scenario because market breaks down under 38.30, and we could possibly see that happen on the S&P 500 today. So let's see how that looks. Okay, so key range bullish if it gets to 40.60-ish area, and bearish if we break down. But at the end of the day, levels don't matter because it's all about the news. So you want to understand the news, and those are the key scenarios that we're looking at. Okay, if you want to play the upside, I'll probably say the Tesla calls do look good. It can possibly go to 220 on a positive FOMC as well. If you have a small account, QQQ can definitely work here because it's at a massive breakthrough. So I gave the 310 calls for I forgot what expiry was it, but I think it was the 26th or whatever the case. But those went up 300% since I called it on Monday. Okay, but if we break through that level here, it would possibly see that QQQ can really rip to around 320. So if you want to add time to your QQQ, you most surely can, and see that pop all the way there. Okay, so watch out for that key inflection point on QQQ. And snow, what we're looking at here is watching snow to see if it breaks above this this 145 area, 144. It's starting to make moves here, and it's out of our bearish range here. Sorry, out of our chop range. This is still considered our bearish range, pretty much because it's still in negative gamma territory, right? Until it gets through 155. But it doesn't mean you can't play calls in this area, right? But it pretty much means that if you're playing calls, you trade them fast and until it gets out of that specific range. Okay, so that's what we're looking at. Meta here is on top of our bullish range here. Okay, so let's see if it gets through here, because the next step up is around 230 area. I haven't been trading Meta a lot here because it's still pretty much trying to get through this level here, not fully confirmed. So let's see if it rejects. It's all about the interest rate announcement for now. And Netflix not tradable yet until it gets 320, I would pretty much say, for any potential upside. Okay, so Nvidia had the AI announcement, of course, and it's still holding near the highs here. Next retest could be 288, 290 here down the long run. But premiums on this are so expensive. That's why it's very hard to map out exactly where we see the positioning on Nvidia. But still, we see 275, 280 area, a strong inflection point. And if the market does have a bad interest rate announcement, I think that this can probably go back to 230 if the interest rate is not so good. Okay, so let's watch out for that. Banks, they're trying to pump back up. GS very possible to go 332 on a positive interest rate announcement. Okay, so if the Feds do cut rates, then we can see a surge in banks. Okay, so I mentioned this a while ago. I'm not sure if you guys remember, but there was a period where banks would surge on interest rate announcements. Okay, that was when banks profited most. But now the marginal gain of higher rates is diminishing, right? So every time Feds increase rates, banks actually lose money because the demand for loan products and so forth and is far less, right? The cost of borrowing is too high, where it's out of the equilibrium. And this is the Fed's major concern with financial markets. Okay, if the interest rates are out of equilibrium, that means people do not want to get loans. That means there's less debt circulating in the market, and there's less capital being utilized as well. Okay, so that's what gives spectators that the idea that Feds may not increase rates. But overall, as you guys can see over here, the expectation is that Feds are going to increase rates by 25 basis points. Okay, some major institutions, including GS and JP Morgan, mentioned they don't see Feds increasing rates, but huge possibility for that to happen. Okay, now one thing I want to talk about as well. So if Feds hint that inflation is surging beyond means, then you can see stocks like MSTR really start to go here. So stocks like this can really go off Bitcoin price. So Bitcoin is in play here because the signal that inflation is getting really bad, and market makers want to search for alternative means to then money will definitely go to MSTR, and this can go. But the problem with MSTR right now is that the premiums are crazy priced. So I would only want to play this only if we do know that inflation is still out of control, just like in Great Britain. Because if you look at cryptos right now, they're still holding the highs with Bitcoin at 28,000. So I would like to add a week into MSTR and possibly look at around 260 area. So even 100 points up, and you add a week could possibly rip. Okay, guys. So that's all I got for today. I hope you guys enjoy the morning call. And for anyone tuning in on YouTube and so forth, we are offering free 5-day trials. So if you guys want to test us out before purchasing our mentorship, you guys are welcome to do so. So thank you for tuning in. I'll see you guys in the chat. Let's get that money.